Here we have our first study using our relative analysis on the S&P Mini on a 5-minute time frame. So as we react in this downtrend, we use our relative / comparative analysis by comparing the local bars, hence it's a relative study, but we still compare the bars. So what do I mean? Well, what do we notice about this downtrend here? Well, look at the buying bars. Obviously, apart from this initial buying bar here, this bar here, high volume. Buying bar, high volume. Buying bar, high volume. Buying bar, high volume. So as we're reacting, we're making lower prices. Someone is buying into the selling. This is a very choppy down move. We're not coming down with any alacrity. We're not coming down like this. Agreed? This is a very choppy down move with evidence of buying. All the high volume bars are buying related. So this helps us. Although we may not be able to make a long play instantly, we certainly know not to short in here. Why? Well, because of the whole high volume bars. Something is suspect, okay? But for longs, we need to wait patiently for the market to give us an opportunity. Good. Where is our first opportunity? Let's add some structure. Like we always do, it opens up the charts. Here we go. Around one. What are these? Low volume down bars. No supply tests. Clear as day. There is no supply on these two bars. Note the volume. If we compare to the previous down bars, look at this down bar, volume. This down bar, volume. This down bar, volume. This down bar, volume. As we can see, the volume is dropped off significantly, and there's no ease of downwards movement. Okay, so we can buy these no supply tests as there's direct strength behind us in forms of hidden buying. That's where the high volume and the spreads indicate that someone is buying into this down move. And what's behind us? A 2-bar bottom reversal where we are oversold in our channel. Then the market prints these 2 bars with no volume. Now, I do understand that one may not want to trade here. Why? Because of this downtrend channel. For structure. But when we can read this action as we can with clarity, it pays to pull the trigger on 2 no supply tests. Now, I want you to think deep, think really deep about what's occurring in this down channel. What exactly is going on here? Well, we're in a downtrend with active buying, as we've noted. Buying bars have higher volume. So every time the market is pushed down, someone buys. And then boom, we get these 2 bars here. There's no volume. There's no selling pressure. Is it of surprise that we get this bar directly after these 2 no supply tests? Is it of any surprise? No. Why? Well, because these 2 bars say there's no selling left in the market. Okay? Think about this. This bar here is average volume of the buying bars, yet the spread has increased over these bars by 1/3. So what does that say? That says there is no selling friction. There is no supply left in the market. Hence, we can push up and drive up with a nice widespread closing firm with the similar volume because there's no selling friction against it. And again, we know that for fact 100% because these 2 bars tell us there is no supply left in the market. So all of this price action here is a complete study, and it's of buying in a downtrend, and it's exhausting supply before markup. Isn't it fascinating? Isn't it amazing how accurate we can read the market? So what do I mean by exhausting supply? Where every push down is met with buying, higher volume buying. That means there's active participants. There are people actively buying. And these two bars here tell us no supply left in the market. Boom, we get this bar that breaks up widespread with similar volume as the previous buying bar. So we get ease of movement. We get good flow to the upside. I mean, we can take this analysis further still. Note this bar here. What do we note about this bar? Well, it has less volume than the previous two bars, yet the spread has increased by a third, 25, 35%. So what does that tell us? Again, we have ease of movement. So we're pushing up. There's a lack of selling pressure in the market. So we can drive up with a nice wide spread on lower volume. And we are also oversold in our channel here. And the market respects this. It responds well and produces a wide spread closing firm. And what else is this action here? A 2-bar bottom reversal. This is a complete setup. It is very difficult to trade here because we do have structure here and we are still in a downtrend. Personally, we do need more confirmation. However, once you have confidence and you can read the chart and your chart reading ability, perhaps you may not think twice about this step of the trade, but I understand that you may not want to buy this 2-bar reversal here. It is a very difficult buy because of this structure. Good. And then we come to 2. A lovely setup. Why? Well, we have additional force behind us. We have this demand behind us that breaks the supply line. So here we're waiting for a pullback. And we may note, if our chart reading skills are good, that we get ease of movement. And we can read the no supply, but perhaps one was hesitant. Okay, nothing wrong with that. But we pay for confirmation. So why is 2 such a good trade? Well, I can't stress how clean, how cleanly we can read this market and how this is offering these 2 bars after this strength. What are they? They are the smallest, narrowest down bars on the chart with the lowest volume, with buying all behind us and direct strength after bottom reversal followed by no supply and demand with ease of movement, which breaks the supply line from our channel. I don't want to say this is a no-brainer, as to get to this level of understanding and building the belief and confidence to be able to pull the trigger takes time. However, when you can, this is a gimme. It's extremely high odds. There's no selling pressure here at this local level of support after this strength. We can see it really is a gimme trade. And then this leads us to 3, a 2-bar bottom reversal, a spring, label unimportant. We can read that this is a price rejection of the lows and we want to buy this on the close or as we rally past this high. Instant long. We need to be longing this as we're in an uptrend, strength behind us, high highs, high lows, and all that good stuff. This is the power of our relative and comparative analysis. I mean, all this analysis here sets us up for the trade at 2. You know, we're suspect of the choppy down move because of the evidence of buying. And when we come back, think about this, when we come back into this area, we use our comparative analysis. So if we look to the left, we saw selling here. Now, where's the selling? We saw, where's the volume? This was the volume associated with the selling over there. Again, another tool. Where's the selling we saw previously? If think of it like this, if the sellers were active and they wanted to push the market down, they would defend their positions over here. Agreed? But we know the sellers are exhausted from the active buying. They've absorbed all that selling pressure, and we know that from here, and we know there's buying in the market from here. So when we come back into this area again, when there's no supply, as we can read and see by the price action, it truly is an extraordinary good trade. I mean, the power of trading in this manner, when we can literally read the bar volume relationship, is unparalleled. You know, this works on all time frames and most liquid instruments, futures, FX, ETF, stocks, etc. Anyhow, yes, there is a question here. Would you take the 2-bar reversal in the downtrend? Would I take this? No. It is incredibly difficult to take for 2 reasons. One, we're still in a downtrend, and there is structure overhead. But we would note the ease of movement here. And we're responding to being oversold in this channel. So these are 2 subtle bullish signs. But I would want further confirmation from this 2-bar bottom reversal, which we get 2, 3 or 15, 20 minutes later from here. There's no supply here. As I've tried to explain this to you, the supply. However, the 2-bar reversal here, or spring, label unimportant, is contextually correct as opposed to here. Why? Well, because first of all, we're at support and we have evidence of strength all behind us, and we're in an uptrend. Beautiful. This is I don't want to use the word no-brainer, but this is an extremely high odds trade, another gimme trade. If we take this trade alone, what's that? 6-7 points, 28 ticks. $350 per contract. Thank you very much. It's a lovely day. Good. There are no further questions.